Yo, what's up, everybody? Welcome back. Welcome back to another episode of Stocks with You. I'm your host, Ulises Herrera. The time of this recording is Monday, December 20th, 2:12 p.m., guys. And like, subscribe, hit the notification bells if you guys like the fact that our videos have been right time and time again, and the video evidence is in our channel, guys. Today I'm going to talk about one major thing that is pretty bearish for Bitcoin, and if you guys think that sounds interesting, stick around for this video because you're not going to want to miss this. So let's get started, guys. So it's not looking good, particularly right now, just because look at this. So we're pretty much just printed a candle right below the 200-day moving average, guys. What happens whenever we print candles below the 200-day moving average? Not only did we print one below the 200, we printed it below the 50, guys. So whatever happens whenever we print below the 200, let me show you. I'm gonna go back into the last time we printed below the 200. So the last time we printed below the 200 was back in September when we had that, quite of a nasty dump. And from the moment we printed below the 200, guys, if you include the wicks, we dropped 13%. If you don't include the wicks, we dropped basically another 10%. That was back in September. So let's go look at what other time we printed candles below the 200 and see what happened there. It's not many times that it happens, but when it does, it doesn't usually lead to something good, unfortunately. And I hate to be bearish. That also doesn't mean we can't just come back up, but for the most part, you tend to just keep dumping after that, guys. Right here, we printed right below the 200 on May, which was the May drop, if you guys remember. What happened after that? We printed, counting the bodies, 20% lower. After counting the wick, 25%, guys. So after that, we had some like spikes. So we try to reclaim the bull market support band, and then we got rejected. Whenever you're below the 200, guys, you need to print above the 200 to stay bullish. This time, when we printed below the 200, we saw a 25% drop after that. I'm not saying we're going to drop 25% from here. I'm saying that this is what happened the last times we printed candles right below the 200-day moving average, guys. So not something exciting to see, guys. It's just, that's the reality, guys. Like I said before, I think that it is not out of the picture to see at least a $40,000 Bitcoin, and its very lowest at 35 to 37 is the point where we should be holding. Otherwise, it'll get very bumpy from there. The last time we printed below the 200 was on March 20th, and we dropped another 38% from there, guys. Bit scary, some of those numbers that you see once you start printing below the 200, guys. I'm not trying to be a bear, guys. I am ultimately 100% bullish on Bitcoin and Ethereum in the long term. We're talking about the short term here, guys. So this is for short term. This could last a couple weeks, it could last a couple months, but ultimately it doesn't look great when you start printing right below the 200, guys. And this just came in today. So we need to see what's going to happen for tomorrow's candle, but we just printed below the 50 and one below the 200. That is not a good thing, guys, unfortunately. It doesn't mean we're gonna not see pumps here and there. That doesn't mean that at all. We could retest 49,000. We could go back to 44,000. But ultimately, what happens on the one-day chart, the bigger time frame, is that you tend to drop lower. And as I've mentioned before, the 2-week chart just looks like we printed another 2-week candle below, or not below, just above the bull market support band, guys. Printing another candle below the bull market support band would not be good. We already did that on the 1-week chart. We just did that a couple weeks ago, guys. I'm sorry, yeah, like 2 weeks ago. And now we printed another one, guys. This is almost below the 50-day moving average, or pretty. I mean, it hasn't printed right below it, but the body of the candle is below the 50. And on the 1 week, that's not good either, guys. We don't want to see us printing below the 50-day moving average, because the last time we printed a 1 week candle before the 50-day moving average, we dumped another 30%. 30%. So let's take the average of what we saw, guys. We saw a 10%, a 30%, and I think we saw like a 40%. So let's say on average we just dropped, let's be optimistic and say 15% from where we are today, which is 47,000. 15% drop would take us to 40,000, guys. And a 20% drop would take us to 35. Ultimately, guys, we do not want to be falling below 35, guys, because it gets messy from there. It gets messy from there. If we're not even holding the last point of support, which is at 30,000, which would be 30% from here, woo! We ultimate buying zone, of course. Ultimate buying zone. You should be accumulating as much as you can if you believe in this long term, truly believe in crypto. But that just means we're going to be going down for a while. Unfortunately, that is the truth. I'm not here to, blow steam. Guys, remember my MACD indicator, once it printed the X the last time on the 1 week, from let's just say from the top of the candle and including the bodies, we went down 30% more. And let's say we're including the bottom of the candle, because we want to be optimistic, the last time this candle printed, and we dumped another 10%. So at minimum, unfortunately, we could see another 10% drop because we just printed this X right here. If we're taking it from the top or neither or the bottom, and any sort of move right now just doesn't look very good, obviously, guys. On the 1 day is what we're talking about. We printed below the 1 day, so printing below 15%, even a 20% drop right now from where we are at the 1 day. 15% is at 40,000, guys. I mean, right below 40,000. That's not good. 20%, 25%. So we could, at best, hopefully we don't get more than a 22% drop, because that would take us to 35. And ultimately, we want to hold 35 unless we want to go back to 30. And that is the ultimate floor, guys. If we don't hold 30, it's going to get bad from there. I think, obviously, because we held 30, wicked down to 28 last time. Unfortunately, guys, I wish I had better news. That's the reality of things, though. That's the reality of being a trader. We have to, if you want to make the hundreds of percent gains, you have to be willing to withstand the 50% drops, 60% drops, guys. That's just the reality of crypto. Thank you very much for watching. If you guys appreciate this information, guys, we are being honest. Like, subscribe, hit the notification bells, and I'll see you on the next one.